GM everyone, and welcome to Smart Contact, an interview series with the world's most influential and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle, our 2025 lead sponsor.
Welcome to another episode of Smart Contact, produced by Web3 Harbour. I'm Yam-Ki Chan, Vice President of Asia Pacific and Managing Director of Circle Singapore, and I'm your host today. We're recording with a live audience, and today's Smart Contact is Kevin Kang, co-founder of Reap. Thank you for joining our conversation today.
Thank you.
All right. So where we're going to start is on Kevin, your story, Reap's story, and then expand out from Hong Kong to the world. Because in many ways, your story and Reap's story is representative of what Hong Kong has been going through and is going through in this new stage, new era. So maybe we start there. Tell me, you just had your office opening yesterday, 7 years. Walk us through that.
Sure. A quick bit of intro. Hey, everybody. I'm Kevin, one of two co-founders here at Reap. I'm currently based in Singapore, but 7 years ago, me and my longtime best friend, Darren, started a business here in Hong Kong called Reap. And we initially started out building financial solutions for businesses that we felt did not have access to such solutions. And we did that through the Cyberport incubation program, which we're very glad to be a part of. And through that, it's been an incredible journey over the last 7 years to really see the transformation of technology, and specifically here in Hong Kong, as well as other regions where we currently operate, and take us to the position that we're in today, which is a financial infrastructure technology provider. And we provide these kind of capabilities, leveraging stablecoins to provide card issuance capabilities and cross-border payment capabilities for fintechs, neobanks, digital wallets, embedded finance platforms all around the world. So maybe I'll take everybody back to 7 years ago and how we started this journey. Both Darren and myself are not originally Hong Kong natives. We were both born in mainland China and then emigrated to Canada fairly young. We met there in middle school and became best friends pretty quickly. And I think we very quickly internalized this concept of being a global citizen. And through that journey and growth for both of us, we eventually found our way back here to Asia for career reasons. I worked in traditional finance for many years, including banking, private equity. And then Darren carried more of the payments and fintech experience, working at Stripe in both San Francisco and subsequently Singapore. I think one of the things that we saw as a problem that we really wanted to tackle was this asymmetry of access to financial capabilities and access. As we were being based here in Hong Kong and Singapore, respectively, we found ourselves to be in a position of luxury, right? Some of these capabilities that I talked about around card issuance, cross-border remittance, yielding, getting access to multi-currency accounts were not the same in various other parts of the world, right? Especially in places like Latin America, Africa, and Southeast Asia. And in the first few years, as we were building these capabilities, we kept thinking about how do we distribute this, right? Being based here in Hong Kong, it's a great city. It's where all of the big banks, the networks, established fintech players are operating out of. But at the end of the day, it's a market of 7 million people.
Yeah.
And in terms of financial services, you truly have to think a little bit global. Back in the day, when we first started in 2018, stablecoins weren't really a thing just yet. And we were leveraging traditional banking rails and found a hard time exporting our capabilities. Because in order for our customers to get access to it, they would have to settle with us through the traditional banking networks, which were still less efficient, more costly, and sometimes less reliable. So over the course of the next few years, we thought about what technology would enable this. What is the first principles of a network that had this capability? And we were fortunate enough to kind of grow up our company in the age of, the remnants of the ICO days that happened here in Hong Kong. That happened between 2015 and 2020.
Were you guys founded during the ICO days or just before it?
We were founded actually right after. So we started in the end of 2018 is when we first started the business.
Okay. So it was literally right afterwards. And maybe just to help the audience a bit, for Darren, he was in Singapore for Stripe. Why do this in Hong Kong and not there?
Yeah, that's a really good question, actually. He was based there. I was based here.
And you won the argument?
Yes, and we had a very deep debate about this. Obviously, both jurisdictions has their strengths. I think one of the things that we wanted more of is the existing financial infrastructure to build the foundations from, right? Where the banks from the West, as well as the networks, were already operating more on a global basis. And we can leverage that foundation and create the solutions that we eventually distributed to the rest of the world.
Yeah. I think very few people know or recognize that Hong Kong is is the only city in Asia with dollar clearing. Same thing, right? It's a pretty unique feature that's a remnant of the early days of Hong Kong that have kind of stayed through. So it made a lot of sense to build a payments business in Hong Kong. When you first started the product, what was it? And how were you leveraging the financial system at that moment in time?
Yeah, it's quite an interesting journey. We first started out as a payments product, right? A traditional payments product. We were trying to help businesses digitize their payments and bring them onto card rails specifically. So the idea was to take payments that were traditionally cash or bank transfers and bring them onto the card rails by providing acceptance directly with the cardholders. So we didn't have to rely on the merchant side to have any kind of acquiring setup, point of sale devices. We would work with the cardholders to pull funds from their cards and do a simultaneous bank transfer directly to the end recipient. I think as part of that, we started to realize how much more we could build from here, right? We vertically integrated very quickly by becoming an issuer directly on the Visa network. And then started building out more capabilities to sponsor other programs and white labeling our services to provide to other fintechs who wanted to leverage this.
Yeah. So this is sort of the early days of the neobank concept and the what I would call the 2.0 of fintech at that moment in time was the hottest thing, and Reap was at the center of that here in Hong Kong.
Yeah.
At some point, you decided then to upgrade the system from traditional finance or traditional payments into stablecoin based payments. How did that happen and what led to that?
Yeah, so that was really led by going back to what I mentioned about how do we distribute our capabilities a lot more effectively. Yes, we were able to serve local businesses fairly well because they can settle with us through FPS, real-time, instant, but we had international customers as well. Like many other financial services here in Hong Kong, there are offshore businesses that come here that want to get access to the capabilities that we have here, including things like non-US time zone, US dollar settlements, multi-currency, a lot of various other things. But it was always a hurdle because of, moving funds cross-border was still costly using the traditional rails. And we were influenced a lot by some of that remnant of the ICO phase of Hong Kong. I don't know if people remember, but a lot of the centralized exchanges, digital wallets, still had a lot of operations here. And we saw them as a vertical that we wanted to serve. When we interacted with them, they had this idea of, hey, can I settle with you using stablecoin? Because for my base business as a centralized exchange, I am already leveraging digital assets and blockchain technology. And I want to leverage your services, but I don't want to, keep converting back into fiat in order to get access to that. So that influenced us to think about, oh, why are they utilizing this? What is it for them? What is the benefit? And we realized that we could apply that same kind of thinking around upgrading that network, as you mentioned, to our capabilities. So we started bringing that in, internalizing that in our card issuing capabilities, as well as our cross-border payment capabilities.
Yeah, it tracks very similarly to Circle's history, where stablecoins was originally used for settlement for digital asset trading. That's where it started, because traders didn't want to go back to fiat back and forth, and it takes 2 days to move between banks, especially in the US. Yeah. So they found a dollar equivalent to be able to settle trades. And what's happening now, at least in the Circle business, is also this transition, or maybe an addition from not only crypto asset settling, but also cash settlement in the rest of the economy and the rest of the real world utility. That's what's driving drove your thinking, and it's very customer led. As you started with that was a set of crypto native companies.
Yes.
How do you bring that to non-crypto native companies, like this sort of adoption from traditional Web2 type or merchants who weren't as crypto savvy?
Sorry to interrupt the conversation, but I want to tell you about our lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global customers,
and the US dollar meets USDC.
Meet Circle.
Thank you to all of our sponsors and community partners. Now, back to the conversation.
I think they also had to go through a similar thought exercise as we did, right? Because we went through that journey of being a not crypto company, but eventually adapting this technology. And a lot of it is that first principle thinking that I was talking about, which is, what does it actually enable you to do, right? Stable coins, digital assets, I think I mentioned is a means to an end. It allows you to get access to certain things that you previously didn't have access to, like card issuance and payment capabilities. So for us, it allowed us to lower our operating costs to essentially make the system more efficient internally, as well as provide service to our customer a lot quicker. And we position this in such a way where the customers can see this as an analogous network to traditional payment systems, right? And going back to that idea of upgrading, if you have an older network that is perhaps a little bit slower, requires batch processing, the messages are not as reliable communicating through that system, and then you have this new network that is now all of a sudden solving all of these problems. Would that be a good foundation for you to build your fintech business? This is oftentimes the question that we asked. And we don't necessarily use the word stablecoin or blockchain technology, and back then it was virtual assets, but simply pointed out the capabilities of that network. And I think we've been able to see a lot of that mainstream adoption in the last 2 years as a result of that education, that first principle thinking around stablecoin and digital assets.
Okay.
I'm not saying that we were the only instrumental communicator and educator in this space, but I think clearly there's been a lot of intermingling between traditional fintechs and the ones that are now leveraging stablecoin technology.
No, it's a great example, because I often get asked a lot from potential partners and customers and leads that says, oh, what are the use cases? Is this only used for crypto trading? And I try to remind people that this is money. So wherever money is used, it could be more efficient. And I like how you talk about the fact that, number one, first and foremost, it just made your business more efficient, your balance sheet. It was easier to move funds for Reap, and then also for your customers, because you're in the fintech business.
I think that's evidently more clear in this part of the world, right? And going back to why Hong Kong matters and why Hong Kong is important, Hong Kong is a financial services hub. I don't think that's a controversial
That's
take.
not news, yeah.
And people here are trying to build better financial technology. And going back to what you said around stablecoins historically was more used for trading, that was mostly led by US markets, right? Markets that already had fairly developed, I would say, real-time payment systems, capabilities for cross-border transactions, the ability to get access to banking networks and card networks. So it's not that they didn't think about this use case, it's just that they didn't need to. The incremental uplift there in that particular payments vertical was not as big. So crypto trading just took off, right? That's the use case that made sense for them. But here in Hong Kong and in Singapore and a lot of places that we're operating out of and the emerging markets, payments is the one that makes sense, right? People here are not just trying to go after crypto trading. So if you look at a lot of the volumes that's non-crypto trading, I would say is coming from markets that are outside of the US.
Yeah. And I talk a lot about this with some of our partners, which is that usually the question is, do you want to be in the stablecoin business or do you want to use stablecoin for your business? And oftentimes they very quickly get to, actually the latter is what I'm trying to do, even though there's this hotness about stablecoins. So walk me through now, you've rebuilt the system, but you're not a stablecoin issuer, you're not you're a distributor in a way, but you're also building additional financial services on top of that. What does Reap offer for a firm? What kind of treasury management, collateral management, other things that you're building out?
So a lot of our use cases are specifically to businesses. So whether that's building capabilities internally for their corporate expense management, treasury management, or externally for their downstream customers and partners, such as virtual cards, corporate expense cards, purchasing cards. These are all tools in the toolbox that Reap provides. And I think the way that we see ourselves is almost that financial services as a service layer, embedded finance for your company. And we don't overly prescribe what that might be, but we do give you capabilities like getting access to yield through certain things like USYC or other yield-bearing type of digital assets. We also provide payment capabilities, which is our bread and butter and how we started in this game, powered by stablecoins. Right. The way that we see it is that I think in the future, a lot of our customers with a captive audience base will converge towards this financial services neobank proposition. It doesn't matter if you start from a centralized exchange or digital wallet. You're going to need all of the tools in the toolbox of which we're building on stablecoin rails. If you go back again to when we first started this business, everybody was talking about open banking back then. I'm not sure if you remember giving that API access and banking as a service to
they're still stuck on that, I think, on the traditional finance world.
But I do think that this can be the next iteration of it. And it is very powerful and very global in nature.
Yeah. It's interesting that when you talk about this, you're using a lot of the terms embedded finance, fintech as a service that was actually in the fintech 2.0 stage, but it's reimagined. You mentioned just a little bit earlier USYC, and for those who are not familiar, USYC is a tokenized money market fund that happens to be issued by Circle. We acquired a company back in January named Hashnote that does this, and it's about just under $1 billion in circulation today. And talk us through that, because you are now using this. You're using it also on Arc, which is a new blockchain that Circle just announced this past week. The way we think about it is there's the tokenized asset or tokenized cash layer, which involves USDC, EURC or Euro denominated stablecoin, USYC, a tokenized money market fund, and then there up the stack and down the stack stuff that we're building. There's the up the stack we have the Web3 services. These are Circle wallets, PayStation, CCTP to move tokens across chains. Downstreams, we have various blockchains. We're on almost 30 blockchains now. And then we're, of course, announcing Arc. A little further up on the application layer, we have something called the Circle Payments Network, which abstracts all of that away for moving funds across borders for regulated financial institutions. How are you thinking about your business, and how are you transitioning that with these different types of stacks? How are you kind of changing your tech stack, and how are things like a tokenized money market fund, which previously I think would have been like a CD account or a money market fund account? Like, how is it different now for you and for your customers?
I think we are also adapting to some of these new innovations around certain blockchains and technologies. I like to think in analogies, right? This is why we were able to transition our capabilities onto this new network, because we saw a lot of analogies. And the reason why I mentioned some of these terms that are so familiar is because I see the parallels. And specifically around what you mentioned about, working with newer blockchains such as Arc. We think about this almost as kind of the explosion phase of the internet, when a lot of capabilities came about, TCP/IP that really allowed newer businesses to be built. So I think we are excited by these things in the sense that we are also leveraging these capabilities to build that toolbox that I'm talking about, to be more interconnected, right? CCTP is extremely helpful because interoperability is all everybody talks about. And not every single blockchain has the interoperability transfer protocol, I believe it's called, ICP or no, ITP.
Yeah.
And so we need to take advantage of this, right? So it's not just us pushing the innovations per se, it's also understanding the layer beneath us and beneath that and where all of that comes from. So we're all in this together, to be quite honest.
Yeah, and even for newbies or in the crypto world, they call them normies. We just think about stable coins, and they forget that the stable coins are different on different blockchains, and they're actually somewhat different. USDC on Ethereum versus USDC on Solana versus USDC on Polygon, and what I describe it as. You can move money on the Visa network versus the MasterCard network versus the UnionPay network versus the JCB network. And what the cross-chain transfer protocol does, CCTP, is the ability to move that across the different chains, so that for you may choose to build on Solana, but your users are on Polygon. And how do you move those tokens natively without risk across them?
I think that's the most powerful unlock for us, which is our customers come from everywhere. For us, we can work with a certain set of technologies and we can be as interoperable internally as we'd like. But sometimes our customers come to us with certain technical requirements. And so we'd have to figure out how to work with certain blockchains if we didn't have these type of capabilities.
So at the beginning of this talk, we started with you, Darren, here in Hong Kong 7 years ago. You're no longer just the company at Cyberport. You have a new office, and you're not just a Hong Kong company. And actually, very few people either know or recognize that you're actually a global firm. You're expanding to lots of different markets. Where are you going, and why? What's driving this? Is it just grow at all costs because you're a startup, or are there demand that your customers are seeking from you?
I think it's very much driven by the use cases that people are looking for, right? And they correlate to certain geographic regions like Latin America, Africa, and Southeast Asia. But that being said, they're all looking for the same thing, right? Which is that means to the end, a stable form of currency through which they can access financial capabilities to build better fintechs, build a better ecosystem, build a global business themselves. So that's ultimately what's driving our direction as well. And we think nothing exists in isolation. You can't just create the solutions here, but not understand where you're exporting these capabilities into. So our operations has expanded into, we have people in 18 different countries, most prominent of which is in Latin America. Our fastest growing teams are in Mexico as well as Brazil. So we see this idea of connecting the world via hubs where they're the network is an extremely powerful concept where each individual node has capabilities, but if you bring them all together, the sum of its parts is much greater, right? There are synergies between how you can connect the East and West, or Hong Kong and Latin America, Hong Kong and Africa.
Yeah, reflection
That's
of
how
a
it
network business.
The network business, yeah,
Yes,
exactly.
yeah. So are these, it actually tracks very closely to how Circle has been growing as well. We have, presence in Mexico, in Brazil. But for you, are these different sets of customers that are there, or are these customers that actually started here in Hong Kong and they're expanding there? How do you look at that market expansion?
It's actually a combination of both, which is why I was hesitant to kind of go region by region.
Mm-hmm.
It just happens to be where the end use case is being served, right? We're starting to see global businesses being built out of everywhere, right? You could have your product team be based in Australia. You can have your CEO sitting in Dubai, but your downstream customers are in parts of the Middle East, right? So it's not so constrained by geographies anymore in that sense. You are able to create a multi-country strategy leveraging this technology.
It's a bit like playing 3D chess, though, to turn everything on all at the same time.
I think that's what's powerful about it, is that you don't necessarily have to find domestic service providers in that sense in every single one of these countries. That's historically how these type of models have evolved, is that, hey, I want to enter a new region. Who can power this capability that I had elsewhere in that region? It's never been, oh, is there one network or one currency that would give me access to all of these things? And I think that's allowed people to scale a lot more into these disparate markets that historically have been considered as long tail. And every single entry to a new market has a very high marginal cost. Right? But if you're building on an inherently global technology like stablecoins, you are able to take advantage of some of that reduction of marginal cost when it comes to entering.
This is the classic internet story where technology flattens the or lowers and sometimes eliminate the barriers to entry. Right. I mean, you think about e-commerce, firms like Alibaba or Shopify makes it so easy to open a site and then have access to customers globally.
Yeah, you can create a business from anywhere.
Exactly. And the challenge has been, though, that until recently, collecting money and moving money has not moved the internet scale, and we're just at the tip of that iceberg now.
Right. I mean, you mentioned e-commerce platforms, and I think that's one of the reasons why we've been hearing a lot more about e-commerce platforms taking advantage of this, is because in terms of, if you're working with a merchant that operates in a jurisdiction where banking access might be difficult to have, how are you going to set up a website that sells stuff? Where is this e-commerce platform going to settle your earnings into? And I think when people adapt the stablecoin story to that, it would allow them to enter a lot of these markets that historically would found harder to enter because there was no banking acceptance.
Yeah. What both you and Darren, as founders, have worked in international companies in the Asia branch or the Asia side, and I know from talking to both of you that part of starting here was a different side of culture, different approach, because generally speaking, this is very, very big generalization. Western firms tend to see the world as the world is flat. We'll take whatever we have in the US or Europe and we'll just apply here, and then everyone else will adopt it. But here it's a lot more fragmented, and successful entrepreneurs constantly adopt and adapt to the local nuances. What lessons are you taking now that you're going global from Asia? And what are you going to do differently than other sort of global firms in the past, or US or Western-centric global firms?
I think we need local presence when it comes to product engineering and technology very
Okay.
early on,
Hmm.
right? The concept here is that you just take one set of APIs and you try to bring them to all over the world is going to be very difficult. It's why historically a lot of the US payment gateways or acquiring setups have not expanded as well in this part of the world or in regions that are more fragmented, not a single uniform market. So we see that as an advantage because we take these earnings very early on, right? In addition, Reap grew up in the age of COVID, where our teams inherently had to be distributed. So we got very comfortable with this idea that not everybody has to be centralized in one location, and you can take advantage of being able to have people in various different regions that provide you the local nuance and the understanding of what those customers are actually looking for.
Got it. No, that's very smart in terms of making sure that your product understand the customer, and one common, again, very general statement is one common mistake for U.S. firms is our talent sits in Silicon Valley, and they should know how everything works. But the fact is that time zones are real, and customers are different, and understanding the pain points of those customers and be able to converse with them and get into their shoes is extremely important to building the right product for that market.
I think that's what's led companies like Circle to internationalize very quickly as well, in the sense that I mentioned earlier, if you're just thinking about that payment service within a market that is already well developed from internal money movement capabilities, cross-border capabilities, you might not see the pain point as much. So that's why you need people that are in these other parts of the world to find that extra product market fit that may not necessarily exist where the technology is being built, right? So if you think about us as a financial services exporter, you got to figure out where you're exporting to and who are these people that are importing these capabilities from you.
Yeah, I like that term, financial services exporter. It's a service-based economy here, which makes a lot of sense. Now, what's next? You've rebuilt your tech stack around digital assets or stable coins. You are offering USYC internally, but also to some of your customers. There's a lot of talk about tokenizations here in Hong Kong, RWAs, not just in Hong Kong, it's actually global, but certainly here first and foremost. So what are the next set of things that you hope to build in the next 6 to 7 years?
So I think the first layer is to upgrade that network across the board with the partners that we work with the customers that we work with. And that's a concerted effort between everybody, right? It's not just ourselves, but our downstream partners. Are they technology enabled enough, specifically around digital assets and blockchain technology, so that we can seamlessly operate on the same system and talk the same language?
Yeah.
I think in the future, there is this idea where we can evolve into a closed loop system where everything is operating on blockchain technology so that we have a standardized form of communication without having to move back and forth between two different set of networks. Of course, there are a lot of things that needs to happen, right? Regulation, adoption, technology capabilities that needs to be built. I think a lot of it is also building trust and building compliance and regulatory enforcement on this particular new technology.
Yeah.
So one of the things that we see today is that there's a lot of regulation that is applicable to the traditional financial system. And the interaction with digital assets is that that enforcement and that kind of policing happens when the funds enter the traditional financial system. We need to build that capability natively, right? And it's not that we can't. All of these things that we're talking about are public blockchains that have the technological capabilities of doing everything that is on the traditional networks when it comes to AML, compliance, and KYC. But we need to do that natively in order for that closed loop ecosystem for us to actually exist, right? I think one of the things that the ARC testnet press release talked about is this concept of distributed governance.
Yes.
So the participants of this ecosystem, of this upgraded network, can also be very much involved in building that capability when it comes to regulation compliance and a set of standards. That's the 5 to 7 year future that I'm really excited about, right? And I think that's the work that we're doing is if everybody upgrades their technology, then we can all operate on the same system and we can have new softwares, agentic commerce capabilities, programmable money. We can talk about these in real terms then because it happens throughout the value chain of money movements, of payment, of financial services capabilities.
Yeah, I'm glad you brought that up because we did a lot of thinking before we launched or announced ARC, which is on testnet as of a week ago. And one of the challenges that we heard from our customers, large financial institutions who want to build in the blockchain, but they've been hesitant, is around this question of trust. And it's very appropriate given that we're at the Trust Summit today. We wanted to find a way to allow for that openness, permission blockchain capability, but the trust and confidence that's needed for regulators as well as financial institutions to on this network. And as you described, we have this distributed validator model as opposed to anyone being able to become a validator, only a select set to start. And that's going to be really important to build that trust and that confidence in the network and get them comfortable. And then the other piece is we have privacy built in, that there's a way for application developers to opt into privacy capabilities natively on chain that has what I think regulators should be comfortable with as well to ensure that they have that trust in the system. When you think of this next phase, are you thinking through what part of the stack? Are you thinking through new assets to offer? Or are you looking at new services that isn't possible before, but now is because the rails are moving faster? Or is it able to do other things that you mentioned, kind of programmable money and agentic payments, which is that deserves its own podcast on its own.
Right.
How are you thinking about it, and can you give us a little glimpse of what's ahead?
Yeah. So I think part of what I'm excited about here is newer business models that historically has not been able to exist because of certain limitations.
Yeah.
Right. If you think about sending very small fractional amounts of money in traditional systems, the fixed cost relative to
It's too high.
It's too high.
Yeah.
That's not possible. So with a better system and having a more relatively cheaper cost relative to the volume you're transacting through, can you do it on a more instantaneous basis?
Yeah.
Can things no longer be batched but streamed in a certain way? These are all questions that we've asked around our customers building some of these new use cases. The other thing is specifically around conditional and smart contract payments, right? These, because it's programmable, you have so much more data within that payment message that you can work with. You can create multiple if statements as opposed to historically just one. That's the way that I would think about this. And if you can do that, then you can create a lot of new software capabilities. Yeah. Going back to
and rethink trade finance. Right?
Trade finance is a very good use case of this, right? Yes. And that's why I think a lot of traditional financial institutions are starting with this as a entry point into blockchain technology.
Yeah. Great. Maybe we'll end with this. You've been building this business for 7 years. There are many that are listening here in Hong Kong, but in Southeast Asia, but really around the world. They are starting this journey a little earlier than where you are. What advice do you have for them? Like, what should they be thinking about if you're a new builder in this space, or you're thinking of transforming your existing Web2 business into the Web3 side? Where do they start?
Yeah, I would like people to understand to look backwards as well as look forwards. Right. The technology is changing very quickly, but at the same time, we're building on history. We're building on the shoulder of giants, and there's a lot of things that we can learn from history. Right? That's why I often point to analogies and then use them in a different way to look at how they can be changed with the latest technology. So if I'm talking to businesses that are thinking about this today, take advantage of the shifting dynamics that's happening in the ecosystem right now, but don't stop just there. And this might be a very controversial take at a conference that's called Web3, but what if there's a Web4 in the future? What if there's a Web5? You also have to think about that. And how can that fundamentally change the businesses that you're building? Don't stop here. Always look forward. That's what I would say.
Yeah, it's sometimes people at the very beginning of a process or new technology, they talk about disruption, and very quickly they get to actually it's an evolution,
right?
And it's actually a maturization of that whole industry. Well, thank you so much for joining today. I think it was a really good conversation. We talked about Hong Kong. We talked about your journey. We talked about the evolution of digital assets in this city and also going global. I want to just thank the folks that have been listening. Thank you for tuning into the Web3 Harbour Smart Contact series, and we'll see you next time.
Thank you very much.